Hey, what's going on, everybody? Happy Monday. Hope you guys had a wonderful long weekend. We are back at it again. Market opens again tomorrow. The futures market opened for a short period today, but it was a low volume market. Tomorrow is when the general market opens, and we shall see how it goes in a short trading week. So we are back at it again here. So right now the futures market looks like it's a little bit green, slightly green, not much, but it's at least slightly green. So let me know where you're tuning in from today, and what country, what city you're tuning in from today. We shall get started shortly here. Just checking out a few things here, and then we can get this party started. Okay. Okay, so we'll start with the last week's week in review, like how the week was last week. So it's from Edmonton. Okay, nice to see you from Edmonton, City of Champions. So last week, what we had was the market was. So if you go to let's check out the. Let's go to Finvis to check this out. Finvis, yeah. Right. So if we go to Finvis, you can see what worked out here. So we can check out the ETFs. And within the ETFs, I'm going to check out the 1 week performance. And you can clearly see what's going on here in the 1 week performance, right? So right here, you can see the SPY. The SPY was down, had a red week, negative. So if you look at this, this shows you all the ETFs. So we have the SPY, we have the VO, we have all these things were all down. And then I think the hardest hit was the QQQ. Yeah, QQQ was not bad. Like, so QQQ was red, DIA ended the week red. All the major indices ended the week red, right? So so the question for this week is that, are we going to get a continuation of the sell-off, or are we going to get a surprise short squeeze? So that's the $1 million question that we are going to get this week. So in this live stream, I'm going to answer that question, as in how to plan for it, how to plan for the long side, how to plan for the short side, and then based on that, you can use that to prepare yourself and position yourself strategically, starting from tomorrow. And if you look at the general, like if we go into the broader market, like let's check all stocks. So all stocks here, you can clearly see what went on. So Apple was down significantly, Amazon was down, Google was down. So here I'm focusing on Magnificent Seven, and Tesla was one of the shining star in the Magnificent Seven stocks. Nvidia was down. Microsoft clinched, I would say like flat. This is flat. 0.04 is flat, right? And then we still see the memory chip stocks like MU closing strong. And then you have TSM2 closing strong. So that's just the week in summary for all the major stocks here. And you can clearly see that the Magnificent Seven stocks have been hammered and they are in trouble, right? Every single time they keep on selling this year. So we shall see if they can wake up this week here to save the market. Because if the Magnificent Seven stocks are down, there's nothing QQQ and SPY could do to stay afloat, right? They have to help QQQ and then their SPY to stay up. So here we have, if you look at Palantir is a retail fan favorite. Palantir is also was down in the week by 3.30%. And we have other stocks like CoreWeave showing strength here. As you can see here, CoreWeave showing strength, closing 6% on the week. Okay, so we are going to look at which stocks are primed to do well next week here. We had Oracle. Oracle did well. Oracle was able to bounce. It got the 12% gain. So when you have stocks that have been beaten down a lot, it gets to a point where they move into like a short squeeze scenario, right? So that's what we saw with Oracle, and we've seen Oracle do well there and bounce. So we shall see how those stocks perform this week. But yeah, this week is going to be a make or break week for the market, because the market is at a critical point, and then if the market fails to hold certain support levels, which I'm going to go through shortly, then we are going to get like a big sell-off in the market, right? And then we are going to go into the correction zone. Okay, so we shall see how things are going to play out this week, and see if the market is able to withstand the pressure of the sell-off, or is it going to just continue selling off, or are we going to just get like a short squeeze, right? So a short squeeze is something that is going to surprise everybody, because a short squeeze basically what it's going to do is that it's going to put pressure on the bears. They have to cover their position, and then the bulls are going to step in, and the bears too are going to cover their position, and it's going to lead to what is called a short squeeze, and you get like a big move to the upside, right? So that is also a possibility here in the markets this week. So last week, what we also saw was we also saw some economic catalysts that came in. Like so we saw the weekend started off with bullish. We saw Nvidia do very well. So those that are in our swing trading service at Trading Rich, we were able to capture Nvidia long on Monday, and it was a beautiful trade, 100% return in just one day, right? So that the week started off strong, and then on Tuesday we got we got like US retail sales that stalled in December. So clothing and furniture were down, and then we got the job numbers on Wednesday. We said that the U.S. economy added 130,000 jobs. Unemployment rate went back down. So those were positive news, but it still could not hold the market up. And on Thursday we got a massive sell in the market, right? And then Friday we got CPI number. So the CPI was down a bit, easing inflation fears, but still the market did not buy it. Like the market did not. The market tried to recover, but it was a weak recovery, right? So it tells me that the economic numbers that are positive that the market is getting, the market does not really trust those numbers, and it keeps on selling, it keeps on doing its own thing, right? So as an investor and a trader, we have to be mindful of those, and then we can position ourselves well and make sure that we capitalize on the moves. Okay, so I'm going to go through the economic catalyst for this week here. So today, Monday, no economic catalyst. We had the President's Day holiday, which has ended here today. Tomorrow, we are going to get Empire State Manufacturing Survey, Home Builders Index, Confidence Index. So this not really a big deal of a thing for the market. So the market is mainly going to look at the jobless claims this week to see how those numbers are coming up, and also is going to look at the FOMC January minutes to see what Fed members were thinking about interest rate cuts. Right, that's going to be on Wednesday, and then on Thursday is going to be the main one, which is the jobless claim. So the forecast for this week is going to be 220,000. So anything above 220,000, the market is not going to like it. The one that was reported on Thursday was 227, which was higher than the 220,000 that was previously forecasted. Okay, and then Friday we are going to get. So Friday, there's a likelihood that the Supreme Court might rule on the legality of the Trump tariffs, right? So we are going to monitor that at 10 a.m. Eastern to see if they go ahead and make a decision or if they are going to postpone it again. So we are going to get GDP numbers. Last time GDP was 4.4. I'm not sure if you are going to get a higher than that or something less. So the forecast is 2.5 this time, not as high as 4.4. And then you have 8:30, you have like personal income, and you have PCE. So this is the Fed's preferred inflation gauge, this one, called PCE. This one, called PCE, this is an inflation number. So this number here, the forecast is 2.9. So anything below 2.9 is going to be a good thing, and the market is going to cheer it and going to be happy with it, right? And then we have the regular consumer sentiment number, right? So consumer sentiment has been, in line with expectations. So that's not really a big deal of a thing. The main thing that the market is going to be watching on Friday is the Supreme Court ruling and also the PCE inflation data. Okay. All right. So this what I'm looking at here. So I'm going to let's see here. It's like I didn't share my screen. Sorry, guys. So here we have let's look at this. Where is this? So this is the market watch. So Friday we are going to look at the PCE and we are going to look at consumer sentiment numbers, and we're going to take it from there, right? Okay. So now let's go through a few things here that I'm looking at for this week. So mainly this week, I'm going to look at a number of things. So also before then, we are going to have earnings coming up this week, right? So this week, some of the most anticipated earnings that I'm looking at is going to be, let's go here. So this is the most anticipated earnings that I'm going to look at. So this week, we are going to look at there are a number of them that I'm checking in here. Some of them are Palo Alto Network. Palo Alto Network is like a cybersecurity company, right? Stock. And softwares have been demolished like this year. So I believe that software stocks have been beaten down. So we've seen a stock like even Microsoft suffering and is been beaten down. We have ServiceNow has been beaten down. We have Snowflakes have been beaten down. So a whole bunch of software stocks are down this year. So Palo Alto Network is part of these cybersecurity companies, and we are going to look at the chart very soon. So I'm going to be watching this closely, cybersecurity. So I'm going to be looking at this for more like a long-term investing and also for trading, short-term trading as well. So as a market participant, if you believe in technology, then you should have a cybersecurity stock in your portfolio, right? Because everything that we do these days has some cybersecurity component, right? Anything to do with AI, anything to do with computer, internet of things, or the AI of things, you need cybersecurity. So these companies, some of them are not profitable now, but in the future, they are going to be a big deal of a thing. They are going to be big companies, right? So Palo Alto Network is going to set the stage here for the cybersecurity and software sector. Also, I'll be going to watch Carvana. So Carvana has been ripping so far. It has done a very good recovery since the pandemic times, and since it sold off, it has rallied and is trading at very high valuations. So I'm going to see what happens to Carvana here during their earnings, right? And apart from that, I think there's Walmart. I think there's Walmart or something that is reporting. Let me see. Where is it? Yeah, Walmart. Walmart is also going to be a key one because consumer staples sector has been doing really well, and Walmart is the leading stock in that ETF. So if Walmart goes down, because Walmart is overextended, the chart is overextended. It hit its $1 trillion mark, I think last week, 2 weeks ago, which is significant, right? So Walmart is now trading like a tech stock, right? And it's overvalued at this point in time in terms of it's trading at all-time highs, and it needs to come down, right? So we shall see how they perform in their earnings. If they can match that 1 trillion valuation and push up, or are they going to sell? So these are the three tickets that I'm going to be watching closely. Also, SolarEdge. SolarEdge is one that is in the solar space. We took a swing trade on that like a couple of weeks ago. That is something that I might also watch. But the key ones I'm watching so far are going to be first off, I'm going to be watching Palo Alto Network on Tuesday, which is tomorrow. I'm going to watch Carvana, which is on Wednesday. And then Walmart usually reports in the morning before the market opens, right? So that's going to be on Thursday. So those are the ones that I'm going to be watching closely here in this earnings week. Okay. All right. So let's go to the next item here. So we've seen that. So currently we've seen a lot of insiders are selling their stocks. I've shown this chart a number of times in a number of live streams. So this number keeps on growing by day. So in 2021, we saw insiders sell at the highest point. So we've not gone into the 2021 levels yet. But I think that after some time, maybe this week or the coming weeks, we might hit the 2021 levels. So at this point, it's showing you that we are getting insider sell to buy ratio is at the highest since the last 5 years. Okay. So this is concerning. It tells you that the smart money or those that control the market know that the bull market is coming to an end and they are taking the exit door before things get worse, right? And because they cannot sell everything at once, they have to sell in small bits to get out of the market, right? Yeah. So we've seen a lot of magnificent service stocks, which are the most profitable and the most valuable companies on earth, all of them selling off. So that is concerning, right? So here we have like also there's also this chart here that shows that in terms of the put to call ratio, we are seeing a high put to call ratio now, right? And this was particularly present before the major sell-offs that we got in 2024. And then here, this was the Japanese carry trade. So anytime we get a put to call ratio, which is greater than 1, we usually get massive sell-offs in the market, right? So during the Liberation Day, April low sell-off, we got a put to call ratio that was in 1.1 range. And here, this is where we are at now in the market 2026 market. The put to call ratio is above 1, which is concerning. It means that a sell-off is imminent, and we shall see if we get that follow through or we get like a short squeeze, right? Short squeeze is everybody's betting that things are going to sell, and all of a sudden the shorts get scared and then they start to cover. Covering your position in a short means that you have to buy into the shares of the stock, right? Or the ETF. So that causes the share price of the stock or the ETF to go up, and then genuine bulls now buy into it, and then they push the stock up. So with the shorts covering plus genuine buyers buying in, is going to spike up the price of the stock, right? So that's why you see stocks like Oracle and things that sold off a lot do a big move like last week, because they are sold off a lot and people will keep on shorting it. So all you need is for one bear to get scared, and then they have to close their position. If they're closing their position, that means that they have to cover the position, meaning that they have to buy in. If you buy in, then it's going to cause the stock price or the ETF price to go up. So this is something that you should just flag here. So again, this is not to scare anybody, but it's always good to know what is happening, what the smart money is doing, so that you can use that to gauge and plan accordingly, okay? So now I'm going to go into the charts, the individual charts, to see what's going on there. So I'm going to start with the SPY. So there's the SPY. I'm going to start with the SPY. See where we are at in terms of. So right now in the market, we are at a very critical level. Okay. So this 100 SMA here, you see this white line? This is the 100 SMA. This 100 SMA must hold this week. If at any point in time we don't hold this 100 SMA and price is trading below it, that means that the market is in big trouble, right? That means that we are now moving. This has been an anchor for the SPY for all these weeks and months, and it must hold. If you go to the weekly time frame, you can clearly see what's going on here. So you see this purple line, this is a 20 SMA. So the moment or the day when we close below, like the weekly candle closes, so this is the weekly time frame. If the weekly candle closes below this purple line, you know that that's a confirmation for a downside move, right? But even then, we need another candle that confirms, gives us the continuation there. So a weekly candle close below this purple line means that we are going to get a change in character, change in market structure. Because if you look at this, all throughout April, like apart from, so here from when did it start? This was May. From May to where we are at now, this has been trading above the purple line. That's the 20-week simple moving average. The last time we got that sell here in November, we came here and what do we do? This was the anchor. This was the saving level, and it held it, and then we bounced, right? So now we are coming here again. We are coming down. So here, if you look at this closely, if you put a circle here, right? If you can't see this, we put a circle here. This is doing what is called a rounding top, right? So rounding top. So rounding top, eventually, what's it going to do? It's going to break down and then go down, right? So it's going to happen sometime soon. I don't know when. It could be this week, but this week is critical, right? This week is critical here. If we break, so you're going to get something like this going down. It might not necessarily be this long candle, but it could be any kind of candle. And then, but as long as the candle closes below this purple line, that means that the market is in trouble and we are going to head down. So what's the next target? Next target is going to be somewhere here. Over here is going to be 650. And then from 650, we are going to come to this area where the red line is, because if we lose this, then the next logical place is going to be the 50-week simple moving average, this red line here, okay? And then this is where I expect price to come in, and that's going to be the last fight, right? That's going to be the last battle. So the last battle between the bulls and the bears. Anybody that wins this battle is going to determine where the price is going next, right? But for now, for the bears have started pushing it, but the bears have not gotten the job done yet. They've not crossed the finish line, right? So until they do so, so first thing first is going to be for them to close below this purple line, which is going to be a huge milestone. And then they can dream about pushing this here. Then we come here. So this is going to give us like the 10% correction. I mean, I've been talking about this 10% correction here. So if you look at this, the highs. So if you connect from here to here, this is going to give you what, 12%, right? So that is a correction. So correction in the stock market is defined as anything that when you get more 10% or more sell-off from most recent highs or all-time highs is going to give you a correction, right? And then once we get here, that is where it's going to be the battle between a fierce battle between the bulls and the bears. If the bears end up winning that fight, then we are going to go into a bear market, right? That's what it is. So for now, we are still in the early stages. It's just a warm-up period. We shall see if the bulls can hold the bears at bay. So far, they are doing their job. They have held them to this area. We shall see what happens this week. That's why this week is a make or break week for the market, right? Immediately we trade below that line, it means that the market is in trouble. We are going to head down, okay? All right, so now let me go back to the daily time frame to see how we are going to make money from this week. So here, we're going to mark this level here. This is the low from Friday, and this is the high from Friday. And then we have this level here in between this one. And I'll mark this one as well as like just in case we come here and then we hold. And then this 100 SMA is also going to be a critical level. So for Tuesday, we are going to be looking at these areas to see how price is going to behave here. So between 686 and 675 is the area where we are going to be trading this week. If this is able to break below the 100 SMA, which is around 680, this area here, 100 SMA, which is around here, if price is able to close below here and we trade below it, this is going to act as what? A resistance level, right? And we are going to see how price is going to behave there. Also, if you look for trend lines, you are going to see that this is the April low trend line. So this April low trend line has been shifted a number of times. Initially it was here, okay? This was the initial one. So this was acting as, support until it broke and then it became resistance. You can even connect it here. You can even say here, this was support. We kept on shifting it, and now we are shifting it one more time to this area. So I'll show you how it looks like. If you do this to this area, you can clearly see that we are touching the 3 key points, right? So if we break below this trend line, then boom, that means that the bears will take over and then do whatever they have to do. Also, you can also draw another trend line here in this manner, which comes this way and it can hold it. So we have a number of checkpoints that we can use as a guide for us, right? A number of checkpoints. So here we can have this one here, which is like a trend line here, this one. So we hold this April lows and here, right? So we have this here. That's how it is, right? April lows, boom, boom, boom. So we can see. So we see that price closed above the trend line. So the bulls know the importance of this trend line, and they know that if we break below this trend line and we break below this 679 level, then SPY will be in trouble. Also, you can connect a trend line from here. That you can start from here, this area here. See where this came from here, this area. And connect it this way to that area, right? You don't necessarily need this because we have this one, right? It's because that one, this one is longer time frame. This one is a shorter time frame. So I'm going to remove this there. So that's what I see here with the SPY. So that's how I'm going to look to trade it. We shall see how things work out in the morning here, because the futures market is still in the early stage. We shall see how things work out in the morning. So these are the key levels that I'm going to be watching going into the market open tomorrow. Okay. Now, next, let's go to the VIX, the volatility index. So the VIX is closed at $20 last week, right? Closed at $20 last week. So this week we are going to watch to see if the VIX is able to break above this trend line here. This one. A break above this trend line is going to intensify volatility, and we are going to get a squeeze, right? As in squeeze in the VIX means that a big sell-off in the SPY, right? So here, if we can get this to spike to 28, definitely you are going to see more blood on the street, right? More blood on the street, as they say, right? You are going to get more blood on the street if this happens. Also, you can draw a trend line like this, which is here, mini trend line like that. See this one, beautiful one like this. Okay, so here we have these two. So here, this one, I can't even change this, make the color yellow to distinguish what we have here. Boom. So you have this here. So these are the two trend lines. So if we crack this yellow one tomorrow, we are going to push, and then we are going to push here, and then we are going to get that breakout. So a breakout of the VIX means that SPY will be in trouble, and then we are going to break below that 100 SMA, break below the trend line, and then we head down. Okay, so that's what you have to be watching tomorrow, and we are going to see how things work out. So if you take off all the lines, you are going to see that the VIX is trading above all moving averages, so it doesn't have any worry, it doesn't have any issues to deal with, right? But go to the SPY and see what's going on there. So SPY is trading below what the moving average is. So it has work to do in order to go back up, right? So if this sell continues if the VIX's rally continues, then we are going to get more selling pressure in the SPY. So if you look at the SPY, let me go to a different board here. You see here on how many occasions here we've had this. So here, this is you see, watch the white line, right? So here, this is the low supports. I mean, over here, it kissed it, not really quite. So yeah, you can say it's a support, but here, and here, okay? So we have 1, 2, 3, 4, 5, 6. So in technical analysis, right, anytime you hit a support level, so you have this support level here. Let's say, let's use a trend line here. So you have this line here, right? So this line, every single time you are hitting it, right? Let me change this to yellow or something. Yeah. So every single time, let me change it to red. Every single time you are hitting this line, it comes here, it hits, right? Come here, it hits it. So the more you are hitting this line, the weaker it becomes. It's just like you're hammering on something. The more you hammer on it, the weaker it becomes. So the seventh time, we are going to get a big breakout, big breakdown, right? So 1, 2, 3, 4, 5, 6. So sixth time was 70% chance of breaking. The seventh time that price tests this 100 SMA level is going to be 80 to 90% chance of breaking it. So that for sure, we are going to get a break to the downside. So the bears have their work to do. They are almost through. They need to finish off the stuff, right? You know, it's just like you went hunting and you were hunting for a deer and then you shot the deer and you don't finish the job, right? The deer can run away and you're not going to get a hold of it, right? So it's like the bears have started, they have not finished the job. If they don't finish the job, the bulls are going to recover and then they are going to smoke them, right? So that's what is happening here. So this is going to be seventh time lucky. Number 7 is very important in technical analysis and is very significant, right? So here you've had all these support tests. So the more you test it, the weaker the level becomes. So we are going to see that push to the downside soon if that happens this week. All right. So that's what we see here with the SPY. Then let's check out the, and also if you go to the over here, so this also has to be your guiding chart, this one. You go to the SPY. So this one here has not like, so I'll not be bullish on this market until we clear over here. You see this trend line here, this one. This is a parallel channel. Right now, any long kind of trades are going to be, for me, are going to be very, are not going to be big size because there's a high likelihood that the market is going to sell off. So until we clear, you see this top here, this trend line here, until we clear here, I'm not going to go big size on longs, right? Every long that I'm going to be taking is going to be very measured, something that is not big risk that I'm taking because it's going to be high risk, right? If you're taking those longs, right? Unless maybe the stock is beating down and I know that, okay, this one is good, I'm buying time on it, I can hold it, right? But the way this is setting up, so here we've seen that every single time the SPY has come to the top of this parallel channel, we've always gotten what? A 28% sell-off. So are we going to get the same here? So what I'm looking for is at least we get a push here into this place, which is the previous all-time highs. That's going to be around 12% sell-off. That's where we are going to see, that's going to be the last fight, right? So this last fight is going to determine where price goes from here, whether we are going to be just a correction or a bear market, right? So that is going to be great. And we are going into March, right? March is traditionally a very weak month. So if this weakness continues into March, it could just cascade and get worse, right? It could just cascade and get worse. So we shall see what happens here this week and the week ahead until the end of the month. So just note this here and make sure you watch this chart to see what's happening there and to figure out where price is going. So next is the QQQ. So the QQQ is the weakest link in all the major indices, right? The QQQ has been weak and it has been selling off. QQQ has not made new highs since what's it called? Since it has not made new all-time highs since October. So it came here, it was able to, we were almost here in January. It almost blasted through, but it couldn't. And he put in what is called a double top. So you have a double top here, and then over here we have you have a double top here, and then right now we are at. So if you look at the weekly time frame, we have already broken. Let me take this line off. We've already broken below. If you check the weekly, we've already broken below here, right? This is the 20 SMA, right? So we've broken below it already, which is a change in character because here you see that here last time price came here, bounce. So it's been bouncing, but this time around it's trading. We got a close below it. So that is what I'm looking to see in the SPY this week. If the market is weak, we are going to get something like this. And in previous times, every single time that the 9 EMA is crossing below the 20 SMA, we've always gotten like a correction or a bear market, right? If you check previous times, even here, look at this. We got what the 9 EMA trading below the 20. We got this sell off. This was the Liberation Day low. That gave us like we call this a flash crash, right? That's 23%. And then from there we rebounded. If you go back to 2021, the last time the teal blue line is the or the CN colored line is the 9 EMA. The nice when it broke below it, we saw what we got a bear market, right? We got a 1 year bear market for 2022. And also COVID, right? COVID crash was also like a flash crash. That one, what happened was that we got the 9 EMA crossing here. And then what happened next? We got what? A 22%. So anytime we get that, we always get that like 20% sell-off. That is a definition of a bear market. Okay. So we shall see if this is going to happen again. But so far, this year is an example of what is called the Wyckoff's cycle, right? It's like in a distribution phase. So we've moved from, this was the beginning of the bull market, which was in accumulation phase, late bear market, beginning of the bull market, and we got that big move in the market. We got to all-time highs, and we have what? A distribution phase. So if you look at this, this is exactly what it looks like over here in the Wyckoff's cycle. So this leads to stage 4 will be the fear. Once we clear through, it's going to be fear, and there's going to be panic. Everybody's going to be running away from the market, and then that's going to cause the market to sell off. So just be vigilant and be ready, because bear markets, newbies do not like bear markets. But bear markets is where wealth is built, right? That's where you can buy the best stocks at a very low price. So you buy them at the bottom of the bear market or during the bear market. And then once the bull market comes, you are going to get a very good price by then. And then you can ride it up to the upside, right? So that is very significant. So for me, I love bear markets, right? Because that's a very good time to get there's names that you like. If you like Nvidia, if you like what's called Palantir, if you like any of these stocks that have been flying, if you like them, it's the best time to buy them will be in the bear market, right? So bear market is a good thing. It's not a bad thing. So, but those that understand how to play it, they make significant return in that. Typically, bear markets are very short-lived. They are usually 1 year to 18 months long, and usually they are quick. And then we go into the bull market. So during that period, if you understand technicals and you understand the mechanisms of the market, you can buy things at a very low price in the bear market and make a fortune in the bull market. Okay, so that's why this is very important. So here we are getting into, so over here, what I'm going to do is I'll just clear these lines here, just show you guys what's going on here. So here we have, so you see this white line here, similar to what we saw in the SPY. We came here 1, then we touched it here 2, came close 3, 4, and over here this was 5 before the sell-off. And then so here this acted as support, and now what did it act as? It's now acting as what? It came back down here, so it's acting as what? Resistance. Okay, it's acting here as resistance. So if you look at it, there's the resistance level. It's acting as resistance and it's pulling back, right? So here, this one here, are we going to get a move like this? So here, are we going to get a move like this up? Or are we going to get just a continuation for a sell-off? We shall see, right? This looks to me like something looking like a low, and this your higher low. So we shall see if that materializes tomorrow. But again, we shall see how this plays out. So if this is able to remount this 100 SMA, right? You see this support area. If it's able to remount it and clear this moving averages congestion, I'm going to put this as a box. If the QQQ is able to clear the 100 SMA and this box of moving average yellow box, then fine. That means that the bulls are back in business, they mean business to take things up. But until then, if they are not unable to do that, that means that the bears are still in control. They are keeping them at bay, right? So yeah, so that's what I'm going to be watching here. So in terms of shorts, I am attacking the QQQ. I will not go after the strong ones. I will not go after SPY or DIA or anything like that. I'm going for the weakest link, right? I don't want stress. I want to go through the weakest link and then attack it, because that's the one that is going to break down first. That's the highest risk asset in the stock market, in the tech QQQ or the Nasdaq. So when there's fear, most investors sell their highest risk asset first. That's why you've seen that Bitcoin has been demolished, right? Because investors and smart money are leaving Bitcoin, which is the highest risk asset. And then second highest risk asset is the QQQ, the stocks in the QQQ. There are about 100 of them. Majority of them are not profitable. If you take the Magnificent Seven aside, most of the tech stocks are not profitable, right? So those are high risk investments, and smart money are selling and moving to safe haven stocks in the DIA and the Dow. Okay, so here we have, if you look at this, so we have this trend line here from here to here. This is what we have now. So I'm being nice here to QQQ. Should put the trend line here, but I'm putting it here because this is the last line of defense. If we trade below here, we break below this trend line, then surely QQQ will head to this area, which is 580, which is over here, right? This is a 200 SMA right here. So this week, if the market weakness continues, surely we are going to see QQQ go to the 200 SMA, and that's an area where we might get some kind of a bounce. If it fails this area, the next area is going to be here, 559, and then this area here, this tiny one, and then it's going to be the major area, right? So this one here is going to be the last fight, right? Similar to what we saw in SPY. So this is the previous all-time highs from 2025. And then that's going to give us, and at that point, that's going to give us what? That's going to give us like 14%, 15% drop. So when this kind of things happen, by the time you realize the market is down by 15%, and when the market is down by 15%, you sure think that what you are going to see that your high-flying stocks, your high-flying tech stocks would have been down 30%, 40%. Some of them are already down by 40% already, even when this hasn't even moved that much. So imagine what's going to happen if the QQQ sells off by a certain amount, right? We'll see how things are going to go, and it can get worse and ugly for these stocks. Okay, so for this week, I'm going to be watching mainly the 100 SMA, yeah, which is going to be a key resistance area, right? This is going to be like a line in the sand for the best. This is going to be their line in the sand, right? If they are not able to, if they're able to defend this area, then we'll be still trading below here or even break here. And then for the bulls have to do whatever they have to do to hold this trend line, right? If they fail this trend line or break below 594, then it's over. We are going to go down here to the 200, right? So the bulls have their work cut out for them. They must come out of the gates tomorrow and make sure that they push the bears at bay. Otherwise, the bears are going to finish them off this week. Okay, so this is a make or break week for the market, because here QQQ is in what I call last chance saloon. It must recover and bounce back and remount this 100 SMA. If it can do so and remount the other moving averages here, then surely we are going to go back and make all-time highs and possibly new all-time highs. But before then, if they don't, then we are going to bet to the downside and capture the move to the downside. Okay, so now let's go to DIA quickly. So DIA is one of the most resilient ones. And for those that have been following our channel, I did a video, I think on Tuesday, and I talked about this DIA here. And I said that we are going to, if you want to short DIA, it's a short setup. Your stop loss is here, and then look at what happened in the DIA. So DIA has been selling, has sold off nicely from that all-time highs area. And you can see here, look at, this was a top and tail candle. Why was this a shorting opportunity? Is because first off, you have a top and tail candle in a white state. And then if you look at this year, we had this 2023 trend line. If you stretch it, it comes here. So you do not break a mother of all trend line just like that, with just that kind of force. And also the Dow hits a psychological number of 50,000. So that is where typically smart money and smart investors sell. They like selling things or buying things at round numbers, right? Which is called psychological number, right? You have 50,000. Okay, so they can set an alert that, hey, once this gets to 50,000, sell me, right? They sell, right? So that's what happened here. And that put in what? You see that on that same day, what happened? This was the Friday. This was when it hit the 50K mark on the DI on the Dow. This is the ETF. And then the following day, what did he do on Monday? We traded inside this candle, and then we popped. And then immediately you see this, you know that the party is over. This is time for me to sell. And that's exactly what happened here. You can see the trend line. So this is the 2023 trend line. Look at how beautiful this is, right? See here, this is why I like technical analysis. Here, this support here, and then this support now. When this broke in Liberation Day, April lows, it became what? Resistance, right? So this has been resistance for the longest time. Resistance, here is also resistance, right? And then finally, what do? We got here on that Friday. On that Friday, DIA could not break above this mother of all trend lines, because this is a trend line from 2023. We are now in what? 2026. So it's in October. So it's not yet 3 years, but it's 2 years and some change. So anything that is long that way, 1 year or more, is considered a mother of all trend lines, and you don't just break it. The longer the trend line, the more difficult it is to break it. Okay. So here we went up. So this was what is called a false breakout. In technical analysis, when you get something like this, it's called a false breakout. False breakouts, the sell to the opposite direction is devastating. It's usually very aggressive. So that's what you saw here. So if you take a trade like this, what you need to do is that your stop loss is here at the top of this top and tail candle. If a daily candle does not close above it, you stay in the trade. Most of the times you are going to, if you are new to this and you've not done this kind of short before, you are going to get this. You see here, this is going to spook you out, right? This is going to be like, oh, this is coming to my stop loss. No, you see, this does not close above this 505.30 level. What did you do? It sold off from there. So as long as this does not close above it, you are holding your trade, and then once this closes here, you add to the position, and then boom, you profit from it, right? So DIA has come to the bottom here, so you can see that every single time this has come here, what did you do? It bounced, right? So this is high likely to bounce tomorrow. Okay, so here you've seen here that this has acted as what? Support, right? So this is actually a high probability trade tomorrow, where you can get a green candle here to the upside. So you can get something like this, and the DI is the strongest. So if the smart money are selling from tech, they come and put their money here, right? Come and put the money in DI. So this can be a very good trade tomorrow into the long side, as long as this hold. However, if for any reason we break below this 491 level, then we are going to head down. Next area is going to be the 50 SMA here. And then if we lose the 50 SMA, then we are going to head down lower. But the Dow is very resilient. It does not just break down just like that. So we shall see. So I'm looking for longs tomorrow on the DIA. Like I'm looking for something like 495 calls. Put my stop loss here. So my stop loss is going to be here. I'm going to move this from here. So my stop loss is going to be here. So daily candle, if the daily candle does not close below 491, I'll still hold the trade and ride it to the upside, right? So this is how I'm going to look at this, and you can get a sizable move at least from here to here. If we go back up, this can give you like a 10-point move, which is going to be a nice trade to the upside, okay? But if we break below here, then okay, no worries. We are going to look to short it to the downside. And first target is going to be here, the 50 SMA. Next target is going to be here. And then we can continue going down. Next target is going to be here, then here, which is going to be where the 100 SMA is, right? So those are the levels that you can look at once you are going to the downside. All right. So yeah, so that's the main thing for the key indices. We can also look at let's also look at the IWM. Let's look at IWM here and see what the IWM is doing. IWM has been surprisingly resilient. I didn't expect it to be doing that. To be honest, right? IWM has been surprisingly resilient, right? So here, let me take off all these lines. So when we got this topping tail, so again, once you get this topping tail candles at a Y state, you know that the party is over, right? So in this trade, what you do is that you put your stop here above this candle, and then you short this. So basically what you look for is that a trade below here is going to get this. And those in our swing trading service, there's a setup that we are going to be trading tomorrow that is like A+ setup, right? Similar idea, right? Those subscribers know already. So if you're a subscriber, go check your portal. Everything is there. And then if you want to subscribe, this is what to do. You come here, you go to courses. I'll put the link in the chat. So we have a high probability trade setups for the week, right? We have 3 of them, right? And one of them looks like what we saw in DIA and looks like what we saw in IWM. So if you want to participate in that, then don't waste time. Go ahead and execute tonight. So here, this is our alert service. This is only $47 a month, right? This is like a no-brainer, right? Last week, right at the gates on Monday, like a first trade, we didn't even hold it for, like, you didn't even need to hold it for overnight, right? That same day, you made 100% return on NVIDIA calls, right? Then we also traded QQQ puts. We also traded XLF puts. I'm going to review that one as well. So last week was, we're hitting it right off the gates, right? From Monday to Friday, we're hitting it just like that. So if you want to join the winning team here, this is your opportunity. And again, we have a ticker that is ready to go tomorrow, right? Ready to go tomorrow. And it's the same setup, same idea. So here it is, guys. So if you want to register, you sign up today, you get everything. And then when I take the trade, I'm going to let you know in the private WhatsApp group, okay? So here we have IWM. IWM is holding here so far. Looking good. So we'll see how IWM behaves. So what I'm going to look at is I'm going to see if IWM can clear here. This area here, see here, if it can clear this trend line, or I can push it this way to see what it does. If it can clear this trend line here, which is where it closed up, or break above this highs of Friday, then it's going to be good. So you see everything like it's red or whatever. These things are IWM is green. So we shall see how it goes tomorrow. If it's able to trade above this trend line and this highs here, is going to push up to the upside, and it could go up to this area. Okay, so we shall see what happens to IWM tomorrow. Okay, so IWM is also looking strong. It's still looking strong. It's not as weak as QQQ. So as we can see, in all the major ETFs or the indices, you can see that the QQQ is the weakest link. So when there's weakness, I attack the QQQ. I will not attack the Dow, because that is going to be short-lived, right? If you're attacking something that is strong, it's going to be a fight. I don't want crazy fights, right? I want easy fights. So that's why I attack the QQQ. Okay. All right. So now let's look at the commodities. Let's look at gold. Gold and silver. I like the setup on gold. I'll show you guys how it looks like. Where is it? Where is it? Gold. I like a setup on gold. It looks gold is actually looking more bullish than silver, right? Gold looks more bullish than silver. So over here, I'm going to take this out. I don't know why I have all these lines, but I'm going to take this out here. So this is the chart of gold. This is the daily chart. And if you look at the daily chart, you can clearly see that this looks like a bear flag, right? Let's look at a bear flag, but we are trading above the moving averages. We shall see if gold is able to hold. So here, this is your flagpole, okay? This is your flagpole here, and this is your flag, right? So here, this is like over here, this area here. That's what we have here. Whoops, like this, and then we have this area, this one, like that. Okay. So basically, what gold needs to do is that gold needs to find a way to trade above this upsloping mini trend line, right? If it can do so, then definitely gold is going to come back to make all-time highs, right? Where's the all-time highs, by the way? Let me move this away. Take this off. Yeah. All right. It's going to come here. This is the all-time highs. So if it does that, but from the way it's trading now, I'm not sure if it's going to do that now, because here, so this area here, so this triangle here is going to be acting as a place where it can play ping pong, ping pong, ping pong, and then it's going to decide, are we going to go up or are we going to go down? So that's what's going to happen, right? But this is a bear flag, right? Bear flag forming, right? Because if you have, anytime you have 50% of the pole in a flag at the bottom, it's a bear flag, okay? So if we're able to get a candle that breaks above this and trades something like above here, like a green candle, then we are going to get that push to the upside. So that's what gold is battling with right now, and we shall see what it does. So if for any reason you see today's candle is red so far, I mean, it means nothing, right? Until tomorrow morning, we shall see how this is going to go. But this candle here is red, right? If this candle breaks below here, we can look to short gold to the downside and target the move to this area, right? Target the move like over here. See where the 50 SMAs. So you see that every time it's been holding this 50 SMA. And then over here as well, I think you can draw a trend line from here. Okay. This trend line here, this area. See here. Perfect, right? So that's a trend line. That's a perfect trend line, right? So that trend line here is holding so far. So you see that here, this was support, right? So if price is to come here, it's intersecting with this. So this can go down like this and then come somewhere here. Let me change this color to make it easy on the eye, guys. Let me just take this color to yellow. Yeah, yellow. Okay. So it can come this way, and then it's going to bounce here, and then it's going to go up, something like that, right? So that's how I see this. It's how this is playing out. It can play out this way, but this trend line is critical. As long as gold does not break below this trend line, you know that okay, there's going to be some kind of a bounce. In that way, this is going to be your low. This is going to be your higher low. That means that's confirmation to the upside, right? Okay. All right, not higher low, the lower high, right? Kind of thing. There it goes up, and then we get that low, higher low, then boom, we get that confirmation to the upside. So I think this is going to be where we get a breakdown. So we shall see how that works out tomorrow. Whether this red candle continues to sell or it holds. Next one is so I'm going to look to trade that using the GLD. That's the ETF that tracks gold. So this candle was a nice one, but you know, again, same same kind of wedge pattern here. So if it's able to break above here, this can push, and then we are going to get into the gap fill. But if we break below here, this is going to be a short trade to the downside. So it's either it breaks out here or breaks down here. If it breaks down, we short it to the downside, buying put options. If it breaks out above this level, we are going to look to buy call options and trade it to the upside. Okay, so next one is going to be silver. So silver is looking more bearish than gold, but I think silver is looking to do like what looks like a mini inverse head and shoulders. I might be wrong, but from a technical standpoint, it's looking like a bear flag, right? It's looking like a bear flag. So you have here, so this is your flagpole, and this area here is where the flag is. So you have here this area here, and then you have this area here. So similar to what we saw on Bitcoin. So here you have this, so we can have a bouncing game, bounce, bounce, bounce. Then it's going to decide whether it's going to go down or it's going to bounce to the upside. So that's how this is going to look like, and then we are going to see how it's going to go. So that's how silver is. However, we are seeing this forming here. This could be an inverse head and shoulders pattern for silver that can take it up, right? So we shall see if that holds and this level holds, then we shall see. If not, we are going to go down and we are going to get a confirmation break of the bear flag. Okay, so that's silver. Let's check out Bitcoin. Bitcoin surprisingly showed some strength on Friday. I don't know where that strength came from. All of a sudden, it was strong, which was really strange, right? Very, very strange. But Bitcoin is still not out of the woods yet, but it's showing some signs, some good signs, some positive signs. So here we have this here. So Bitcoin needs to find a way to hold this mini trend line here, right? So right now is at this area. The way this looks like, it looks like it wants to break it. We shall see how that works. If it breaks it below here, then next target is going to be here, right? And then it's going to come back here and possibly is going to do the what we went all the way to 59k, and then it's going to do like a double bottom, right? If it's strong, it's going to do a double bottom and go up. But otherwise, it needs to find a way to hold here. If you can hold here, then it can go up, right? So that's what Bitcoin. So if Bitcoin is strong, you can trade Bitcoin using the ETF IBIT to ride it to the upside, or you can target Bitcoin stocks like Coinbase. So Coinbase took a trade on Coinbase. If Bitcoin, so Coinbase is at what I call last chance salon. So if you look at this, right, if you put a line here, you can see that this has acted as support, right? One bottom, two bottom, triple bottom. So I put the lines back. This is what you get here. So here we took a trade here on Coinbase, and we are swinging this to see if we can get a follow through continuation. I mean, it was green on Friday, but we held it here, looking to see if we can get a control. So usually in technical analysis, if you have a stop close above the 9 EMA, right, for a recovery, that is a positive sign. So if this can master the strength and break and hold 168 tomorrow or 170, then definitely we are going to fill the gap here. Just going to shoot to 180 and it's going to push up to the upside, right? So for crypto related trade, I'm going to be watching Coinbase, and it's going to be an easy trade in terms of if it either has to go up. If it doesn't, then it's going to come back down here and it's going to break below this 147 and we are going to short it to the downside. Next logical target is going to be here. You see here, this is the low of this day and the high of this day. So 113, this can go as low as 113. If Bitcoin is to go back down to that 59k level, that's what might happen. Or this can just consolidate here and wait for Bitcoin to do whatever it wants to do before going up. So those are the options. All right, so now let's go to the individual stocks. Individual stocks that I have here. I have a number of individual stocks that I'm going to be watching. So one of them is like ETF. I'm going to start with an ETF here. I did a video on it on the weekend, so make sure you watch that video on the banking sector crash, right? So here, KBWB. I like this setup because this setup reminds me of Bitcoin setup, right? Mother of all trend line setup. So if you go to Bitcoin, look at Bitcoin here. Let me just do a recap here just to show you. So again, setups. Once you see them once, you can see them again in the future somewhere else, right? It's like watching a movie multiple times. So here you see Bitcoin. This is the mother of all trend line for Bitcoin. This is 2017, right? Any single time Bitcoin came to this resistance trend line, it always sold up by 83%. 83%. So here, look at it. This coming down. If this continues, we can head to 80% or more, right? So here, we've already done 50% sell-off already. We just have 30% to go for this to come and fulfill this historical pattern, right? So with this in mind, keep this in mind, I'll take you to the banking sector, right? So this is the ETF that tracks the bank stocks. And anytime we have this type of potential sell-off, it means that something ominous is brewing, something bad is brewing that can cause a huge market crash. So here we have 2018. 2018, I believe there was some kind of recession in the US due to the trade wars and stuff. At the time Trump was president, there was trade wars and all that craziness going on, right? Trade war with Canada, trade war with China, all sort of tariffs and crazy things going on, right? So it caused the market to sell off, and then bank stocks sold off, right? So here, if you look at, so this is another mother of all trend lines. This is 2018, right? If you extend it here, it goes to 2022. And this, so but every single time this has encountered this resistance trend line, is sold up by 53%. 53%, right? So are we going to get the same kind of thing here? Most likely, right? 8 out of 10 times, 80% probability we are going to get there, right? So this is a weekly time frame. And if you look at this weekly time frame, this has already confirmed its plans to sell off, right? So you see here, this is a green candle. This green candle, the body of the green candle was wiped out by a red candle. So this is what is called a bear 180. Those that have taken our course, bear 180, that means that we have more follow through to the downside. So if this week we get a break below $83, this is going to head down to the downside. So this here is something that I'm going to look to. I don't have a position in this, but I'm going to look to open a position like I'll buy 6 months out, allow it to play out. My stop loss is here, right? If this daily candle closes above $92, fine, I'll take a loss and walk away. But if not, I'm holding this. I'm holding it for a while, because if this works out to give 53% or even 25% decline, that's going to be a significant gain. So this is something that I'm looking for, like a medium to long term kind of swing trade that I'm looking at. So make sure you take advantage of this. Yeah. And next one is another ETF. So Magnificent Seven stocks have been selling off. If you look at Apple is being demolished here, selling off. If you look at Google, selling off. It couldn't break this trend line, sold off. If you look at Amazon, selling off, right? If you look at Meta, selling off, right? So the thing is, you cannot be trading all these individual ones, right? So what you can do is that you can trade them using the ETF. So the ETF for the Magnificent Seven stocks is called the MAG-S, right? And I like this chart, right? This is like, oh my goodness, this is like this is like, where are we going to go? It's a simple trade. It's either have to hold this. So here I have this. So let me take off the line. So here, so if you look at this, this has sold off because Magnificent Seven has been selling off all year long. I even forgot to add Microsoft. Let me add Microsoft. Look at that. Microsoft has been demolished. Look at this. This is a double top, and from the previous all-time highs last year to where it is now, Can you believe it? Microsoft has sold off by 30%, right? Which is not nice, not good, right? So that has affected this Magnificent Seven stock ETF, MARK-S. And this is now trading where at the 200 SMA. So it must hold this 200 SMA, right? If it fails to hold it this week, then more calamity will happen and it's going to head down. Next logical target is here, 58. And then from 58, we are going to go lower, right? So if you look at this, you can draw trend lines here. So one of the trend lines that I spotted was here. You look at this. So this has been like acting as support, right? Look at that. See that? And then here as well, you can connect one from here, actually from here. And it forms here. And then this level here where the 200 is also a level. So if you put the lines back, boom, this is what you see. So watch the orange lines, trend line, and then once you put in this line here, $60 level, that is where the 200 SMAs, okay, let's change it to yellow, 200 SMA, boom. So this is what you have here. So this thing here is at a critical support level, right? A critical support level where it must not break, right? That's what it is. As they say, it must not break. It must find a way to hold it, right? So if it doesn't hold it, then this is going to be in trouble, and then we're going to get that sell to the downside, right? We are going to get that sell to the downside. So that's what is happening here with the Mark 7 ETF, and yeah, so we are getting this sell here to the downside. So I believe that we are going to get a bounce, right? At least we are going to get a bounce, like a short-term bounce that can take us from here to $62 level. So I'm looking for $62 calls this week. However, if we break here, I'm going to look to buy put options and target 59, this gap fill area, to the downside. Okay, so that's what I'm looking at here, and that's how I'm going to look to trade this. All right, so next thing I'm looking at here, next ticker I'm looking at here is also an ETF, but that ETF is in the software sector, right? Most of the softwares have sold off a lot, and now we can see if they are going to get a bounce. So some of the software stocks are Microsoft. So Microsoft has been selling off a lot, and I think that it's due for a bounce, but it's been struggling, right? Anytime it tries to bounce, it just sells off again. So one that I'm looking at here is called the IG. So again, you can look at the holdings of these ETFs to see what's going. So IGV. Okay, so IGV, if you go to Yahoo Finance, IGV, Yahoo Finance. Let me just one sec, guys. IGV, Yahoo Finance. Let me go to Yahoo Finance here. Oh, what's going on with this? IGV. So if you go to IGV, put the IGV here. IGV is, just give me 1 second. Oh, so giving me this. Let's go to IGV ETF. Perfect. So the IGV ETF is iShares. So let's go to the holdings, right? Let's look at the top holdings for this ETF. So if you look at it, these are software ETF. This is a software ETF, right? And softwares, anybody that has been following the market closely, you can see that softwares have been demolished, right? So if you go check each individual stock here in the top 10, you are going to see that all of them are in the same predicament, right? Microsoft sold off, right? We checked Microsoft a few minutes ago. We are going to check Palantir as well. Oracle got some kind of a bounce on Friday. Oracle has fallen off the cliff, right? Oracle, look at Oracle here. Take off the lines here. So Oracle, look at from here to here, it has sold off, right? We checked Microsoft, this 61% sell-off. We have seen Palantir to sell off. So software, I'll call it software like demolition, right? Software demolition. Look at Palantir, 40%, right? We saw Microsoft was 30%, right? And now there's this one, ServiceNow, also has sold off. So softwares have been demolished. The reason why it has been demolished is that most investors are thinking that some of the functions of these softwares can be done by AI, right? So that's why their fears on these softwares have been selling, but some of them are going to recover, especially the cybersecurity ones, and also obviously Microsoft, right? So that's the ETF that tracks all these softwares. Okay, so with this ETF that tracks all these softwares, instead of trading each one of them like that, you can trade some of them, but you can look at the ETF. So the ETF here, I think some of the software sell-off is overdone. Okay, I believe that is due for a bounce. So if you go to the weekly time frame, you can clearly see what's going on here. So you can clearly see we have a trend line here that can connect this. You can see it clearly. That can connect this here. So you can see that this is here is a critical area, and this is the 200-week simple moving average, right? So it must hold this here. If it doesn't, then we are going to head down. So if you go to the weekly, same idea, that same trend line. So when we put the trend line in, look at it. So that's the trend line here. So we have the trend line here. Support, 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 right? So we must hold. So here, this could present an opportunity to go long, where this trend line is your stop loss, $80. So daily candle, if the daily candle closes below 79, it should get you out. Otherwise, this is a good, we can get that kind of a short squeeze bounce where you can get a bounce, a sizable bounce from here to here, right? Because this is a critical level. This was resistance, then resistance, and then we broke out of here. So any move, I'm targeting this area for the move, right? That's the weekly move to the upside. So I like IGV, maybe like $85 calls. You buy time on it, expiring in March, and allow it to play out. Okay, right. So I'll go to the individual stocks now. Now that we finished the ETFs, I'll go to the individual stocks. So one stock that I'm watching here, if the market is weak, is, I mean, if Apple sells off, then the market is going to sell off. So Apple, this does not look good. Okay, so here, this is what is called a bear 180. Those that have taken our course, you know what this is. This is called a bear 180. And when you get a bear 180 here in the Y state, you always get, this is going to be 80 to 90% follow through. You are going to get more red candles. So do not be surprised that this is a weekly candle. By the end of the week, Apple closes red, right? With an 80% probability, right? So here, Apple 2 has formed what looks like a head and shoulders pattern, okay? Head and shoulders pattern. And with head and shoulders patterns, what you can say is that, okay, we can find what is called the measured move. So a measured move is here at 225. If you take this measurement line and put it here, this is where Apple can go to, at least give or take 219 or 220. If you are generous, somewhere here at the 100 SMA, right? Somewhere here. So Apple still has, like, more downside. We shall see if it can hold this 255 level. A break below 255 is going to send it down, and it's going to send it to the next target, which is going to be here, 243, and then it's going to go lower from there. So we shall see how that plays out this week here. But Apple is in trouble. So if you look at Apple here, Apple is in big trouble, right? So here, There's also a trend line here that's going to act as support. So if it comes down, say you connect here, let's do this one, right? So this area here, this is a support trend line zone. It's a zone. It can be a zone, right? Zone, this area. So we can have this as a zone as well, right? So here, if we can hold here, then we can look at bounce, but a break below here is going to send this down to the downside, right? And it's going to trigger that. It's going to confirm that head and shoulders pattern break, and we are going to head down. Okay. Next one I have in mind here is what is it? Next one I have here is UNH. Okay. So UNH is a stock that we traded and we capitalized on the move last year. We caught the bottom here to this area. We caught like about a 65% move in the equity and about 500% on the options, right? So here, this is forming what looks like a inverse head and shoulders. This is a confirmation pattern. So for UNH, what I'm looking at is I'm looking for the gap fill. There's a gap fill trade. As simple as that, right? I'm not looking for anything else. I'm looking for a gap fill trade, right? So this area here from, so it can give us like a, what's it called? 100 points move. Not quite 100 points, but if we can get like a 60-point move here, this is going to be nice. We are going to fill the gap, right? So for now, what I'm looking at is I'm looking for this to break. So we saw a break here, a breakout here on Friday, a breakout of this trend line here. We saw this breakout of this trend line, this area, and we are pushing up now. We are trading above the 9 EMA, which is significant. So now we are going to see if we can break out of here. If we can break out of here to the $300 mark, which is a significant level. So next target is 299 or 300. Next target is 304, and then we can go up and up. So this can be a good one for a bounce trade targeting the gap fill this week. Okay. Another one that I'm watching for a short. This one we need patience on it is AMD. So AMD is clear as day that it has a gap fill. So this trade idea is to target this gap fill here at 170. So this is operation gap fill. If you can fill the gap, then that's great, right? We can fill the gap here. So you have here double top. You have this here as these are going to be your targets. And this was support. Now it's broken down. It's now acting as resistance. So we shall see what happens here. This can come all the way down and fill this gap. So here, there's something that you can buy time on it as a swing trade and allow it to play out. You put your stop loss above this trend line. If price comes and remounts this trend line and closes above the 100 SMA here, then fine, you can decide to exit. But if not, you hold the trade and allow it to play out. Another one is Palantir. This is the retail favorite, right? So Palantir is been selling off. It's been selling off a lot. And if you look at this, Palantir is trading below the 2021 trend line. And now that's acting as what resistance now. But is at a critical level here, which is the previous area where we got a breakout from. That is February 2025 over here. So I think that Palantir might get a bounce, like you can get a bounce here this week. So a bounce that can bring you to the top of this trend line. Then from there, we can figure out where else it goes. So you can get a sizable bounce, not as long as this. I mean, you can get that in one day. But once it gets here, we shall see if the bulls still have gas left in their gas chamber to be able to push this up. But otherwise, it's going to come here and then it's going to start going down again, right? So that's how I see this. And again, if the software stocks are struggling, then you know that ETF is also going to break that trend line. So it's like whichever one comes first, you can trade it and capitalize on the move, right? And last but not the least is Tesla. So Tesla was good last week. It was stronger than the QQQ last week. and I believe Tesla is due for some kind of a bounce. If the market is strong this week, do not be surprised to see Tesla bounce. So Tesla here, we have this falling wedge pattern, and we are pushing up here. So if Tesla can master the strength and push and come here, I believe that Tesla is going to push, and it could go to 450 in no time. 450 somewhere here. Yeah, 450 in no time. And once it gets to 450, then it's going to do crazy numbers. But Tesla has been one of the, at least a little bit resilient, Magnificent Seven, although he also had his own fair share of sell-off, right? Like 2017, not bad. But Google has been the one that has been really strong amongst them. Look at that, Google. Right? But Google is coming also down to this 100 SMA here. So it's going to be from here to here. It's going to be what? 15%. So that's why I want to attack the Magnificent 7 ETF this week. But Google is coming to a critical support, and that support is going to help it to get some kind of a bounce. Okay, right. So yeah, so these are the main tickets I have. Also, in terms of the earnings coming up, what I'm going to look at is I'm going to look at XLP. XLP is the consumer staples ETF. So if you look at this consumer staples ETF here, right? So ETFs, you have to check and see what is the major, what's this? So here, oh, I can't even say it. So here, right? So this one, this was a cup and handle. So this is your cup, this is your handle, and then we got that breakout, right? So if you look at this ETF, if you analyze this ETF, right, you go to Yahoo Finance, XLP. So this is the ETF that captures the consumer staples. Consumer staples here, if you look at it. So it's consumer defensive. So this is the area where smart money comes to when there's fear in the market. They sell their tech stocks and they come and buy here, because these stocks that are listed here, right? These are stocks that when we are in a recession, you don't have a choice. You have to eat, right? So you go to Walmart. You don't have a choice. You have to go to Costco, right? Procter and Gamble. If you want to get, like, if you want to use, like, get tissue, if you want to get toothpaste, this kind of things are very important, right? You need them. So you don't have a choice. You have to buy. You have to go and buy it, right? If you have like deodorant and stuff, you have to come and buy them here with Procter and Gamble, right? And then here, Coca-Cola. Coca-Cola, what do they sell? They sell sugar water, right? Colored sugar water. That's what they sell. So anytime you go to a restaurant or something, hey, give me a pop, give me this, you're contributing to that, right? And in North America, most people, anytime they eat any food, they have like a soft drink or a juice or something like that to complement it. So that means that these companies, even when we are in a recession, people are going to buy into them. So these are this, if you look at this ETF here, right? XLP, the highest weighting is what? Walmart, right? So, and the way it has gone parabolic like this, Walmart has its earnings. Is it on Friday? Walmart's earnings is on Friday, right? Let me see. Let me double check again. When is it? Tuesday. When is it? Walmart, yeah, Thursday morning. Okay. So if that earnings come in and is bad, so let's look at Walmart. Walmart is now a $1 trillion company. It's even trading higher than the tech stocks, right? So if you look at Walmart here, so Walmart, is done well, but I don't think that with the earnings is going to go higher, right? Because it's too extended to the upside. And I believe that with the earnings, Walmart is going to do something like this. It's going to pull back, right? They can have good earnings, but Wall Street will say, okay, this is good earnings and stuff, but you are too extended to the upside. So we are going to get that retracement here. Or it's going to be buy the rumor, sell the news. We have this push, and then maybe we have like a consolidation candle, and then we go down here and retest. So if that happens, if we get a pullback in Walmart, then surely you can short this one, SLP, because this is the highest weightings, and if Walmart sells, this one is also going to sell. and this is where it's going to come into this area. So you can use Walmart as a guide. If Walmart pulls back, this also pull back. So you can short both, or you can long both once they come into critical support here, break and retest of the breakout zone. Okay, so that's what I'm going to be watching. Also, I'm going to be watching Carvana. Carvana, right? Carvana has been selling off. Carvana has done a remarkable job from a stock that went to 372 in the pandemic, sort of came all the way down to $5. This is one of the miracle stories of the stock market, this Carvana stock, right? This thing came to $4. Can you believe that? And today, where is it at? It went all the way to where? 1,150. No, it's not even 1,000. I'm even reading it wrong. 11,000. 11,151%. That's what it did on the equity. This is not an option, this is equity, right? So this stock here, I think they are facing some lawsuit or something like that. You know, anytime a stock is trading at high valuations and stuff, you know, all of a sudden you get some people that are suing the company, right? So that's what is happening here. So Carvana, I think that at some point Carvana will be trading in the 200s, maybe somewhere here in the 200s. So it could happen here post earnings, and you are going to get that sell to the downside. But it has sort of from its highs, after putting in like a double top, it has sort of so if the market weakness continues, things like Carvana are going to sell and things. So we are going to see the earnings come out. I think it's tomorrow. When is it? No, it's not tomorrow. Carvana is when is it again? Carvana, I'm not seeing it here. Let's check here. Yeah, Carvana, Wednesday after the close, right? Yeah. And then Palo, last but not the least, Palo Alto Network. Palo Alto Network, Palo Alto Network, this one. Cybersecurity. So, yeah, I mean, these stocks have sold off a lot. So I believe that Palo Alto Network has to do something in order to get that kind of a bounce. If not, then it's going to sell to this area where the 200 is, right? And that's a critical level where it must hold in order for this to work. Because if you look at it, maybe what they are going to do is that in maybe tomorrow before the earnings. When is the earnings again? Let's see. The earnings is in the afternoon, right? So maybe tomorrow they are going to sell it to this area, hold it here. And then once the earnings come, if the earnings is good, then boom, take it out, right? But that's an area where price can come to. So I'll look to trade this after the earnings, but I'm just showing you how things are going to play out if the earnings come into play. But these stocks have been beaten down a lot because software is under attack, right? So this is down by 25% from all-time highs. Right. The same thing is happening to CrowdStrike. CrowdStrike as well, demolished, right? It's holding here at the 100 SMA nicely. So if Palo Alto beats, CrowdStrike will also will also go up. So here, CrowdStrike 2 is a good one, where if you hold, Palo Alto Network beats earnings tomorrow, is going to get a sympathy play and it's going to push up as well. So here, what can happen is that we can get this to CrowdStrike can come here, and then CrowdStrike can do something like this. All right, head and shoulders pattern, and then it can sell off, kind of thing, right? So that's what is it. Okay, guys, that's about it for tonight. I hope you learned something. Let me know if you have any questions. Put your questions in the chat, and I'll be happy to answer them. And we are going to wrap up here tonight, and I'm going to be trading live with the day trading subscribers tomorrow morning. Going to trade options and futures, and also those that are in our swing trading service. I've already provided you guys with the top 30 tickets for the week, and those ones are ready to take off. One of them is looking like the silver setup that we captured a while back, right? Silver setup. So we shall see how that goes. It has a nice topping tail. And then we have, so if you want to participate in that trade, make sure you sign up and you know what to do. You go to tradingread.com, you check out the courses, click on reach alerts, and you are going to get access to it here. I'm going to put the link once again in the chat, and then you can take action. So let me know if you guys have any questions. If there are no questions, then we can wrap up here and call it a night. Have a great trading week. Bye for now. Bye-bye.